Improving Alpha Innovation in Investing, ESG and Technology with Michael Oliver Weinberg, in partnership with Vidrio Financial, is being sponsored by Alternatives Watch, providing a 360-degree view of investor mandate activity across alternative investments, and PEVC Tech, a community for family offices, private equity funds, lenders, and VCs using AI and analytics to generate alpha. Vidrio Financial is a premier data management provider, shouldering the responsibility for your data from collection to extraction, transformation, and enrichment. Vidrio monitors over 2,000 diverse funds, processing millions of data points each month. Discover how Vidrio empowers your institutional portfolio data by combining advanced AI and human expertise to yield comprehensive analytics on performance, cash flow, risk, valuation, and more. All delivered seamlessly through Vidrio's Data Management Hub. Save your investment team valuable operational time, providing actionable insights like never before. Explore more at vidrio.com.
Hi, this is Michael Oliver Weinberg. We would like to welcome everyone to the Improving Alpha, Innovation in Investing, ESG, and Technology podcast series. Today, Koray Caliskan, fellow professor at Parsons, is our expert. So listeners have a high-level sense of the roadmap. We'll start with some background, then discuss innovation with a focus on technology, particularly blockchain and crypto, and then also hit ESG, specifically social innovation. Investors and business leaders should be able to extract a great deal of value from Koray's insights. On that note, welcome, Koray.
Well, thank you very much, Michael. Thanks for having me.
My pleasure. Our pleasure, I should say. Let's start briefly with your career evolution to where you are today. So I will let you tell that story in a nice, concise, but good way.
I'm a scientist, like you are. I work on economic sociology. So I study economic processes in markets, platforms, barter relations. I'm also a designer. I work on how to make organizational devices to be used by actors in complex organizations. And at Parsons, I led a program called Strategic Design and Management with my colleagues, and we tried to bring together two things: to learn to make things and to make things to learn about them. So we use design as a social scientific method. We also use social sciences in order to design organizational interventions.
Interesting. It's super interesting. And let's get right into the meat, for lack of a better term. You wrote a book called Data Money, which is an interesting name. And let's talk about why you believe cryptocurrency is data money, and then get more granular on that.
It's like Marco Polo going to China again. You know, he was a Venetian merchant who went to China, and Kublai Khan was using a new money form called paper money. It was a piece of paper with scribbles on it. He brought them with him back to Venice, showed it to people. Half of the people looked at it and said, this would never be money. Money can only be metals, gold or silver. They didn't use it. The other half revolutionized Venetian trade, became very rich, and then paper money became almost the most important financial innovation in world history, until around 15 years ago, a new money emerged for the first time. Previously, we used to send the value we imagine on paper to each other. Now, we imagine value in data and send each other the right to send it. You may ask me the following: why is this a new money? Dollar is already digital, right?
Yes.
You're right. Dollar is a digital representation of paper money. It is not data money. We still print dollar as digital, as a representation, and then exchange it. It's still accounted in a double entry bookkeeping method with central banks and also regular accountants and controllers taking care of it. But we do not use cryptocurrency as money. Cryptocurrency works with blockchains that keep accounting possible in a distributed way. We monetize the right to send data with cryptocurrency, not a paper or its digital representation. This is new. Like in times of Marco Polo, we're still discussing whether cryptocurrency is money or not. And like in Venice, half of us say, oh, it's not money. The other half say, it is money. And I am a part of the other half who argue that this is a historically new money form. It's faster. It draws on monetizing the right to send data, not digitalizing a paper money. And in the future, we're going to see almost all central bank fiat currencies moving to cryptocurrencies or data monies.
So the point at which I exclaimed, I agreed with you, and then you went on to refute that. But I mean, effectively, so I understand the dollar obviously is not on the blockchain. It's a double entry accounting system, of course. That's irrefutable. But my point is, the printing of dollars is nominal. I mean, look at the bank runs we had last March, right? Post GFC, depositors literally lined up outside the doors of WAMU, Washington Mutual, in the global financial crisis for 3 weeks and had a run on the bank that largely, detracted its deposits, which in turn made it insolvent. Last year, just over a year ago in March, right, we had a run on various banks, Silicon Valley Bank, First Republic Bank. And those banks, there were some depositors lined out at the doors, and it made some nice press photos and coverage like an old-fashioned bank run. But the reality was, for example, it's public that for, I think, First Republic, within 3 days, there were electronic funds transfers that had effectively wiped out sufficient amount of the deposits to make it insolvent. And then Silicon Valley Bank, a similar situation. So my point is, yeah, sure, nominally there are dollar bills. But the reality is, in my view, I don't know about you, how many dollar bills you have in your wallet or, that you use on a daily basis. But I would say I pay for 99.9% of my life with credit or debit cards, primarily credit, but also debit cards. So or electronic funds transfers or wire transfers. So my point is, sure, nominally there are dollar bills. And you're right. Of course, there's a central bank that has to, quote, print them or control the supply. And that's a difference. But isn't effectively the dollar a digital currency?
It is a digital currency, and it doesn't have to be effective. Ruble is digital currency too. So is renminbi. So there is no discussion about it, and I agree with you. And I also agree with you that right now, credit cards and transactions are also quite efficient, and they are not very slow. We don't have to wait like 2 weeks in order to transfer money, but we wait 2 days. If the amount is, say, $1 billion, if the amount is $100 million, you have to wait a lot. And for understandable reasons, for security purposes, lawyers have to see the transactions, there are tax considerations. However, right now, cryptocurrencies are faster monies because they draw on a more efficient accounting mechanism. Right now, you can send $1 billion worth of, say, Avalanche in a matter of seconds with minimal cost. There is no way that we cannot adopt this technology. And looking at how people adopted in the last 10 years, I can see that the future is going to be a hybrid between paper money and data money, very much like when paper monies arrived in Venice in 16th century. It took 100 years for them to replace metal money in everyday transactions. Even today, we use quarters, so metals are still around. So there will be a time for this transformation to take place, but it is happening, it will happen. Now we're talking about a market capitalization between $2 to $3 trillion of cryptocurrencies at a time when states did not adopt them yet. Very soon, we're going to see that Fed will also adopt it, because right now they cannot follow the money without checking the books. With cryptocurrency or data money, using a money and an accounting mechanism as fast as data money, they will be able to follow money, find ways of curbing financial illegitimate transactions, and more importantly, locate more tax events in order to be able to increase our taxation and also increase public revenue. So structurally speaking, materially speaking, and accounting, with reference to accounting speaking, we are looking at a new kind of money material made up of data, not an electronic representation of paper money. Electronic representation of paper money is still slow because you need to send it over tables, and then there needs to be a series of accounting work happening after this transaction. With cryptocurrency, it's a matter of seconds, and it's rarely disputed. And banks are also moving. Chase Manhattan was against it. Its CEO, JP Morgan CEO, was against it. He even looked down upon cryptocurrencies, and then JP Morgan also started to build their own. And we know that all central banks are now looking into building their own blockchains and central bank digital currencies. I think the discussion is over, and we're looking at the transformation, the early days of a transformation that's going to take probably 10 years.
Shifting to the cryptocurrencies for a second, are there certain ones you think are survivors, and others you think are losers, or would you be a buyer of broadly of cryptocurrencies? Is Bitcoin a winner? Is Ether a winner? Is and on it goes.
This is a very good question. There's three types. One is Bitcoin, the first one, and it's a proof of work accounting system. It's open. Everyone can be an accountant in its blockchain, as long as you invest some in computing infrastructure, and anyone can transact it. However, because of that, and because it draws on an older technology, it's very slow and burns a lot of electric. Around like 90% of electric burned by cryptocurrencies is only by Bitcoin. That's why I would never touch it. Think about it as a locomotive that moves with coal in it, the early locomotive. Then comes Ethereum. It's faster. However, it's not an interchain. It's growing. They changed the accounting structure to make it greener. However, it's like, think about it as a diesel engine locomotive, all right? And then there are blockchains like Solana or Avalanche, which are interchains, which are faster. And many banks have tried their systems, and to their surprise, they realized that they work faster, better in a more reliable infrastructure, including JP Morgan, actually. These are like bullet trains that operate on wind-powered electric resources. I would buy cryptocurrencies since I finished my research. While I was carrying out research, I didn't trade them, but right now I'm trading them, and I would definitely buy from the top 25 most valuable cryptocurrencies and keep an eye on new ones which provide a service. But things like Dogecoin, which do not provide any financial service other than speculation, would be out of my radar. However, Avalanche, the native coin is called AVAX, is an interchain, which is like three blockchains working together in a variety of ways. It creates an enormous financial advantage for transactions and verifications. So
Why is that? Sorry.
for a number of reasons, not only because academics developed it at Ithaca, financial engineers, but also they studied money and they understood that firstly, it was something social. So you need to build a community around it who would maintain its infrastructures. You need to build people who work on improving its infrastructure of accounting. And Avalanche and Avalabs seems to be doing it better than many other cryptocurrency projects that I have studied. And I have looked at, as you know, those new finance communities or pop finance communities, where people actually not only study making money, but making money itself on the ground, earmarking a lot of their free time, just working on finance, first as a hobby and then main source of income.
Understood. And what's your view on regulation? Is crypto underregulated or the opposite? And either way, why?
Crypto is underregulated, grossly underregulated. Regulators did not understand it for a long while. They thought that it was not a financial innovation and people were just speculating. Then they realized that they were not speculating and they had to find a way to regulate them. But how are you going to regulate them if you do not have tools of regulation, such as you don't have a central bank digital currency as fast as data money, right? How do we able to control the transfer of money, because we have a very fast system in order to understand and follow the trajectories of money. Right now, regulators do not look at it as data money. They seem not to understand the new money material. That's why they are using analogies to make sense of it. Like before scientists, people would use analogies to make sense of the world. And now they are with the improvement of modern sciences, we use concepts. Regulators do not have a concept to make sense of data monies. They think that they are electronic currencies that are made by different people. They are not. It's a new money form. Because they cannot regulate, we had a failure of FTX, for instance. If regulators were adamant in looking into regulation, and almost all actors of cryptocurrency world seek regulation and have been seeking regulation, we wouldn't have the collapse of FTX. Right now, regulation is coming, but without properly understanding how cryptocurrencies and blockchains work. And because the central bank digital currency does not exist in the United States, regulators and taxation authorities lack an instrument to tax crypto worlds properly. So they work together. We can tax paper money because we have paper money. You won't be able to tax paper money with metal monies, Michael. Imagine a regulator is using only metal money and everyone else in the world, businesses are using paper money. You need to load like trucks load of monies in order to be able to do that. It's not fast, it's slow, it's not efficient. Right now, we're trying to tax crypto with paper. We can't do that. It's over. So we need to have a central bank digital currency or a central bank data money, and also regulations, understanding of cryptocurrency as data money, making sense of its material, and studying its accounting structure better. Then we will be able to regulate properly. And also, the public can increase its taxation with the new central bank data money.
You and I were at an interesting digital symposium a few weeks ago at Columbia Business School, and I think you had mentioned, I don't know if this is something you can discuss or not, but I think that was one of the things you may be working on, if you can discuss it, in terms of, I guess, the government accounting for crypto gains. Is that a fair assertion, or can you elaborate on that?
Yes. Right now, we're taxing crypto gains as short-term or long-term capital investment. We cannot see a cryptocurrency income without an investor selling a cryptocurrency and buying dollar with it. So whatever investors do within the world of cryptocurrency financial universe, the government cannot see unless it is sold to become a dollar. Imagine that you make a lot of money on, say, Ethereum trading and then cross trading. And then you originally bought 100 Ethereum, and then you sell 100 Ethereum. And then the money you make is in terms of dollars. If it's 366 days after you bought the particular amount of Ethereum for the first time, it's a long-term capital gain. If you keep selling and buying the same amount, the government will say, oh, okay, he bought and then he sold. So they are actually treating cryptocurrency as a capital gain, but they are not. You can actually make more money. Thus, the taxation authorities can collect more taxes if they followed cryptocurrency with a data money. And more importantly, I wrote a paper about this taxation and regulation of cryptocurrency in a journal of finance. I can share with you the link after the program. I propose that the government can tax cryptocurrency with cryptocurrency itself. Why not tax Ethereum with Ethereum? Get your cut. Say 10%, 7%, 8%, or AVAX with AVAX. And then a government authority can collect these cryptocurrencies, and then depending on the market, whether it's bullish or bearish, cash it to dollar afterwards. This would immensely increase taxation, make public finance stronger, faster, and it will be easier to follow a fast money with fast instruments. And this will happen. 5 years, 15 years, I don't know, but it will happen. We know that it happened before. We know who's using cryptocurrencies. Right now, perhaps you have followed, Financial Times had become the first newspaper to post cryptocurrency prices in its front page now, right? Only Ethereum and Bitcoin, but it's going to get more and more. Furthermore, my book also showed that cryptocurrencies have not been alternative to fiat currencies. They have been contributing to their popularization. United States is the largest cryptocurrency country in the world in terms of its trade and volume. And I have shown that cryptocurrencies have been supporting dollarization. And in Europe, euroization, not creating an alternative to it. Why? People right now use them mostly for trading purposes, and they buy it with dollar and euros. And there's a number of other indicators that I mentioned in the book that shows that they contribute to dollarization.
For example, it was El Salvador, I believe, right, that theoretically converted to a crypto economy. And I thought that was a failure in terms of adoption. I thought it really had not worked at all, but you correct me if I'm wrong. Maybe I haven't paid enough attention to it.
In terms of daily transactions, it was not a big failure. For the world poor, credit card or monetary transaction is still far away from their everyday life. Even in New York City, if you're an undocumented immigrant, and there's like tens of thousands of people like this, cash is a more effective way to pay things and save money for yourself. In the world too. So in El Salvador, we have seen that moving to cryptocurrency in terms of state finances, in terms of savings and central bank, helped them pay their debt. However, cryptocurrencies were not used every day for transaction purposes for a variety of reasons. First, For instance, because we don't have a central bank digital currency, it's not easy to buy and sell. And you have to spend money on markets like Coinbase or Gemini or Binance in order to buy and sell. And they are not necessarily very fast. So in the future, when we see a larger adoption, we're going to see that the share of cryptocurrency in everyday transactions will get larger and larger. Let's remember that it took 200 years for American population, half of American population, to learn how to buy one stock. When the first stock exchange was opened in Philadelphia, it took 200 years for half of American population to learn to buy a single stock. Even now, not everyone knows how to do that. So financial innovation is adopted slow. And we have seen that cryptocurrency in the last 10 years had been perhaps one of the fastest financial innovations in world history in terms of adoption.
Well, you hit on another good point, which I found ironic, which is, one of the whole bull cases, for lack of a better word, or raison d'etre for crypto was to disintermediate Wall Street, eliminate brokers, eliminate middlemen, and lower transaction fees. The transaction fees on crypto on the exchanges are immense compared to a fraction of a penny per share or almost transaction-free equity trading costs. So I'd be curious to hear your thoughts on that.
Cryptocurrency, just because of an innovation or because of blockchain, cannot get rid of intermediaries. Every financial innovation introduces new forms of intermediaries. So in the book, there's a chapter on how cryptocurrency re-intermediates, how it creates new forms of mediations among transactions. Of course, it displaces the older and slow version of banks and double entry bookkeeping. However, it creates other intermediaries. For instance, if you want to trade in an exchange, you would like to leave your money there to be able to trade it fast. And they have to take care of your cryptocurrency, and they have to make immense security investments in order to be able to keep your money safe. So you pay a part of your income as a fee to those markets, and compared to the amount of money people make in those markets, I believe the fees are still negligible, and they are not too much for investment purposes. And it also depends on whether you're a market maker or a market taker, like many other auctions and markets and exchanges. So if you are a market maker, you pay less, and depending on the amount of money you trade, the amount you pay to the market goes radically down. And I can say that talking to many traders and interviewing them, the fees they pay is not higher. However, it would be wrong to think that cryptocurrencies, data money is just work by themselves and they don't need any intermediaries. As you very nicely put, we are facing the emergence of new intermediaries, however, on a generally more effective financial infrastructure.
Interesting. You wrote, let's shift gears for a second. Obviously, one of the legs of the stool, or so to speak, to use an analogy, as you alluded to, and is on the podcast is this ESG, and you received some significant critical acclaim on social innovation. Could you give our listeners a brief sense of what that was and what your thoughts were there and why it's important?
Social innovation is really important. Trying to find new ways to address old questions right now is a must, and we have to be attentive on this need, and we have to design new ways of finding ways to address questions, and we're going to do this by changing our organizational culture, and without that it's impossible. Yet on the other hand, there is also a discourse called entrepreneurialism, I hear it everywhere. People are like, you're gonna find an idea, believe in your idea, and then pursue it until you're 45, and then you end up no income. You spend your dad's credit card until you are, I don't know, 35, and you're still trying to be that person who's going to make 1 million or 200 millions because of your innovation. I'm not sure this is happening. In a paper that I wrote with a colleague of mine, we called it a discourse of entrepreneurialism, where young people are invited not to go to universities, study science, and then work with others, have good jobs, like be a good engineer, be a good professor, be a good doctor. Instead of this, be a good entrepreneur and make money. This is one of the worst ways to secure your future, because one every 10,000 people get rich, and the other is under severe depression. And I have seen generations of young men and women who couldn't make it. So I believe that social innovation is important and we need to believe in it. But we also have to be mindful of the fact that we live in larger organizational contexts, and it's always better to find ways to build solidarity economies, because when we do things together, we enjoy them more. And almost all cryptocurrency currencies were made by such solidaristic intentions in mind. People came together, believed in financial innovation, and pursue it. We didn't have this lonely, strange guy who believes in himself, but no one else. 99% of these people are wrong, who believed in themselves, and society moves them aside. A few of them remains. Sometimes they are right, but this is very rare. So I never advise my students to try to be that 0.1% guy or woman. All right, just be with people, work in organizations, believe in social justice, and addressing questions that concerns planet and inequality. And life is gonna give you a better life.
No, it's funny when you said that, and I know it wasn't your intention, but in my mind, I kept thinking Satoshi Nakamoto. Do you have a view on who that is, if he's alive or she, or any views on that, or just curious?
I met another Satoshi Nakamoto, who built a cryptocurrency previously, and I interviewed him. So a Satoshi-like figure, you can learn more about him or they in the book, a different guy called Electra. I think they were people in California. They chose a Japanese male's name, and they didn't want to be known because they became awfully rich. And for security purposes, they wanted to keep themselves anonymous. And it seems like they have been very successful. So if they are listening to us right now, you did it. Why don't you come up now and then tell us who you are, and then we can learn about finance by talking to you.
Yeah, couldn't agree more. Though then that defeats their being immensely well off and hiding it and being covert. But anyway, okay. And then you also wrote a book because you're obviously super broad and varied and interesting, called Market Threads: How Cotton Farmers and Traders Create a Global Commodity. So in a nutshell, give us the synopsis on that and why, what we should understand from that and what you learned from it and what we should learn from it.
That book came out a little bit more than 10 years ago from Princeton and looks at how markets work on the ground. I was trained in options and futures, and I used ethnographic methods to make sense of how traders are trained. And I figured out something really interesting, Michael. In universities, in colleges, in economics departments, we teach supply and demand to understand markets to kids. And then in trade schools, where everyday trading happens, they teach political economy. You need to understand politics. You need to understand social. So you have to become like a little Karl Marx and Karl Polanyi in order to make sense of markets in everyday life, in the real world. And then I decided to write a book that explains how real markets work on the ground, instead of believing that what happened in supply and demand in the past is going to inform the making of prices in the future. There is a better way to make sense of prices that traders use every day, and I try to explain how prices are made in a new way in this book. But thank you for asking about this book. Not everyone knows about this. It's an older book right now.
Yeah, no, well, anyway, it's timeless. It's no less applicable now than then, right?
Yes, and what's really nice about this book is that I test whatever I learned in this book every day while trading, while investing. I have a design company in London with my partner, Matt Wade. I have formed a platform company before who had like 120 people working for it on food. I have a film production company before. So I was an active economic sociologist in markets, and I'm very, very good in losing money as an academic. But I also make money because we survive, right? It's not always like I know how to make money, or I take initiatives, and then some initiatives that I took previously made money, some lost money. You may ask me, what is it that you learned from the ones that, lost money? What I learned was something that Bill Griffin, my mentor in commodity trading school that I went, told me, you need to learn one thing to be the perfect trader in the world, and you learn one thing every year. So I'm keeping learning how to be a good trader, how to build good companies, but I'm fascinated by economic things. I think microeconomics was fantastic in putting together the simplest way to make sense of markets, but it simplified it so much so that we fail to understand it if we use those simple tools. Right now, we have more effective tools to make sense of markets and economies. And we also find ways to introduce design in our organizational study. So I believe that in the future, by building better organizations and organizational devices and agencies and networks, we will be able to address pressing questions of our times better, and in part also thanks to machine learning.
Well, we could go for hours, but we don't have time. But any films you've made that we would know of or would have heard of?
Yeah. There's one film that was shown in the short film corner of Cannes Film Festival. It's called ESMA, ESMA. If you write my name and write ESMA together, you'll find it on YouTube. I made a film about Kurdish question in Turkey. I'm the producer and writer, co-writer, and another director shot it. It's called In Flames. I have a documentary on Al Jazeera called The Last Peasants of Turkey, drawing on ethnography in a village in Turkey. I have another film about the impact of Turkish TV series around Mediterranean and Black Sea, shot in Ukraine, Egypt, Lebanon, Greece, and Turkey. I made a lot of films.
Nice, neat. I will look forward to checking some of them out. I spent a lot of time in Turkey. Okay. What advice? Do you have any advice for allocators and investors?
Yeah, I would definitely keep an eye on cryptos and build organizations that draw on blockchain accounting. I see that future organizations will be using them. Second, whatever I do, I have a strategic designer on board. And right now, I'm working with a major car company to design a design process of a new model. So what we today do is not only design something, but design the process of design of an organization that makes these things possible. So 2 things, take a look at cryptos, it's very important, and blockchains. Second, put design to whatever you do, hire a strategic designer. These people are going to be the next generation management people in the future.
Before we go, we do have another couple of minutes. Any other high level thoughts on the impact of AI and LLMs on either investing or perhaps more broadly people's careers and employment prospects? Curious to hear your thoughts. Sorry.
Yeah, I edit 2 journals. I'm an associate editor of Journal of Cultural Economy, one of the most influential economic sociology journal in the world right now. Also the editor-in-chief of Strategic Design, Journal of Design Strategy. And we see an explosion of science. Papers are increasing. The number of papers are increasing. I see an explosion of productivity in writing and interpreting the world. And large language models, machine learning has been helping us for at least 10 years right now. But with ChatGPT and popularization of tools like Gemini or Venice or what have you, we have started to work with 2 or 3 robots around us. Sometimes we make them work at the same time. It helps us do 2 things really fast. First, research. For instance, you want to do legal research, you can have AI do it for you. You don't have to pay $500 to a law firm. And every law firm are now working on how can we decrease our fees in order to keep the research side of things under control. The second, articulation. We're going to be more articulate. More importantly, we both use many languages in our research and everyday life, but not everyone is lucky for that. And a majority of the world, young people are working on learning English and articulating themselves in English, which is becoming a professional lingua franca. I see that my international students now work with a free copy editor. When they write a paper, they can articulate themselves faster and better. So we're seeing more and more productivity coming up. So I am very positive about machine learning, but I also think that we need to be careful about who is controlling this technology and how the public is keeping an eye, how the state is keeping an eye on taxation and regulation and their effects. We still do not know how to deal with platforms. For instance, we think that Google search engine is just one engine. This is the largest factory that humans build in world history, with like 135 data centers all around the world, with 5 different businesses wrapped together, and we feel like, oh, this is just an engine. It is not an engine, it's a factory. It's a platform. And each part of the platform could be done with like a variety of companies, or Amazon, or many other platforms that are dominating right now. I don't see that we're going to have giant platforms dominating everything in the future. Our understanding of digital economization is going to get better. We still understand platforms by dragging an already obsolete understanding of market from 17th century Scotland, that of Adam Smith's, and think that platforms are multi-sided markets. They are not multi-sided markets. They are other things. And one of the chapters of the book actually explains what a platform is and how it can be understood better, thus regulated properly.
Yeah, I mean, again, you and I, we could go on for hours, but we probably should start to wrap up. So look, I think that was super insightful. Thanks for the discussion and sharing your most valuable asset with us, your time. We hope listeners have a better appreciation for what one of the more thoughtful professors on crypto and taxation and governance and social innovation is thinking about, and that we can all benefit as allocators and investors. So this is your host, Michael Oliver Weinberg, hoping you join us again. for our next episode, where we speak with another thought leader who will provide insight into improving alpha via innovation.
Thank you for joining us on the Improving Alpha Innovation in Investing, ESG and Technology podcast, presented in partnership with Vidrio Financial and sponsored by Alternatives Watch and PEVC Tech. Vidrio Financial offers a cutting-edge data management solution that not only collects and cleans your data, but also empowers investment teams to cut through the noise and extract valuable insights for better decision-making in areas such as valuation, risk assessment, and portfolio management. If you're an endowment, foundation, pension, sovereign wealth fund, asset manager, OCIO, or family office facing challenges with your data pipelines, we invite you to connect with us today and explore how Vidrio can seamlessly integrate with your investment team to enhance your data management capabilities. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views or opinions of Vidrio Financial or our host, Michael Oliver Weinberg. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding investment planning.